Hello everyone, welcome back to my channel. I'm your host Miss KK and this is The Wave. It is your weekly show that looks at topics related to personal, family and business finance, and our hope is that by the time we get to the end of these conversations, you are really better equipped to make sound financial decisions. So if you're new here, thank you so much for stopping by. We really appreciate having you on board. Please do consider subscribing, and if you're already a returning subscriber, an awesome appreciation. Alright, today we are continuing with another video on our payslips review. So if you haven't done so, please watch the previous week's video where we actually dissected a few aspects of your payslip that you ought to understand. And I did a poll on my Instagram recently where I asked whether I should do another video on our payslips review. And the reason why I'm doing this is because there was quite a few other aspects that I couldn't touch in the previous video so that I don't keep the other video too long. And I really want us to start understanding aspects that are really critical to our financial journey if we ought to start making sound financial decisions. So in this video, I'm going to be looking at the high-level structure of what you can expect in the payslips, and when you get your payslips from your HR department, what do you look at? So a lot of companies actually have online payslips where they generate an email to you, and as an employee, you have a profile where you can actually go and download your payslip. Alternatively, some other companies might still have the traditional method where a week after payday, they will send out an email to all the employees and say your payslips are available for collection. And as an employee, you need to make time to go to the HR department and actually go and collect that in hard copy and sign that you have actually picked up your payslips. The reason why they do this is because they want you to take ownership of your payslips, and they want you to review, and if you pick up any error, you need to go back to them so that they can rectify that error, because no system is error proof, and no human can go around without making mistakes. That is the reason why HR is giving you these payslips for you to review. Before we get into the three aspects that I look at my payslips when I get it on a monthly basis, I would like to look at a high-level structure of what you can expect to find on a payslip. So there's generally a few components. The first components would have total earnings. In total earnings, you'd normally find basic salary, you would find maybe housing allowance, and with the housing allowance, they'll split it between taxable and non-taxable. If you have any other allowance, maybe travel allowance, cell phone allowance, they'll put it in there. And if there's any other, additional earnings that they give you, maybe a performance bonus, they will put it in that aspect, and that will give you your total earnings. Below that or adjacent to that, they will have total company contribution, and these are contributions that the company may make in addition to what they were prepared to pay you, or in a tax structuring incentive scheme where they structure it in such a way that it's considered as a total cost to company, but you as an employee, you have an influence on how much you put at company contribution. So here you would find things like medical aid contribution, you find things like pension fund contribution, and you find things like social security contribution. Why I'm saying that you as an employee has an influence in company contribution is because your age and your dependency would determine how much money you contribute towards medical aid, your elective of what percentage or how much your salary you would like to contribute would have an influence on how much is treated as company contribution or how much your company is actually matching to contribute. So this aspect of your payslip is also influenced, and most of the time, if this aspect of your payslip is really just a salary structuring, if it's not sitting in company contribution, it will go back and sit in total earnings. So if you take total earnings plus company contribution, then you get what is called total cost to company. And from a company's perspective, total cost to company is what really matters to them, because this is the cost of them having you. Whereas for us as individual, net pay is what matters to us, because that's ultimately what I get in my bank account, and that's what ultimately that I get to budget on. So for them, they are monitoring total cost to company because that's what is hitting the bank. So they either pay you your net pay, and then they have to pay over your medical aid to your medical aid fund. They have to pay over your pension fund to the various contribution fund. They have to pay over your pay as you earn to the receiver of revenue, and they have to pay over your contribution of social security over to social security. And if you maybe have a loan, they'll have to pay that over to whoever you owe. So for them, it's total cost to company. For us, it's really just net pay. And we also have an influence of how much we actually ultimately take as net pay, because if you don't have a pension fund contribution, a higher medical aid option, then that means you get to net a lot more at the end of the day. So that is total cost to company. Then on the other side, they will have your deductions. Deduction is what is actually taken out from total cost to company to get to your net pay. So this would include like pay as you earn, social security, and all the other deductions that you have on your payslip. So at the end of the day, all of that will give you net pay, which is ultimately the number most of us actually look at. So understand that structure of your salary, understand the structure of your payslip, so that you know when you get your payslip, where should you be looking. If you want to see how much is this company incurring to have me on their payroll, you need to look at cost to company. If you want to see where is my money else going, if it's not coming to me, then you need to look at the deduction. If you want to see how much do I actually get in the bank at the end of the day, you look at net pay. But most of us don't even have to look at net pay, because we look at our bank statement when that money is deposited in our bank account by the employer. So when I get my payslip, assuming you either get it online or you go pick it up a week later after payday, what do I look at? Personally, I look at net pay. I expect my net pay to be consistent, except if there's an adjustment that I'm expecting. For example, if your employer is paying you a bonus, if your employer is paying you overtime, if you had an medical aid adjustment, if you had a salary adjustment, then your net pay is going to change. So I look at my net pay to make sure that it's consistent with the previous months. And if it's actually fluctuating, I understand the reason for fluctuations. Sometimes you may have maybe taken an advance from your employer, where your employer has given you a portion of your salary in the middle of the month instead of giving it to you at the end of the month. In that case, of course, you can't expect the same net pay as you did last month. So I look at that to just make sure that there are no surprises. Secondly, I look at how consistent my deductions are, in particular medical aid and pension fund and group life covers, etc. So these deductions are, especially medical aid, is supposed to be consistent, except if you add a beneficiary to your medical aid, or if there was a rate increase by the medical aid contribute fund, or if you maybe jumped an age bracket. Surprisingly, when I posted the other previous video, my one friend went actually back to her payslip, and she actually realized that her medical aid was fluctuating over the last 3 months, but nothing has been happening. She had already the baby more than 3 months ago. She didn't have a birthday over the last 3 months. There wasn't an increment that was communicated by medical aid over the last couple of months, but her medical aid contribution was actually fluctuating, and she didn't understand why. She called the medical aid. The medical aid actually confirmed that her employer is paying over the right amount. So there's something that maybe have gone wrong with your payroll system, such that her amount is fluctuating. So those are the things that you can expect to pick up if you really start reviewing your payslip. So that's the second thing that I sort of look at. Are my deductions consistent, and is there anything that maybe is surprising for me in that month? The third thing that I look at really is pay as you earn. Of course, pay as you earn is also supposed to be consistent, except if your salary is fluctuating on month. Like I've mentioned, if you work overtime or if you get a bonus, you are likely to pay a steeper tax in that month. The main reason why when you get a bonus or when you work overtime, your tax tends to be a lot higher than in the previous month is because most of the time, if you are not at the lower end of the tax bracket, when you get a bonus or when you get an overtime, it pushes you in the next tax bracket. And when it pushes you in the next tax bracket, you are charged at a higher rate. Then all of a sudden you fall in a different tax bracket. That means instead of you being charged, for example, at 28, you're now being charged at 30. That's why the tax is always steep in that month. So I always look at my pay as you earn to see whether it's remaining consistent, and if it's actually steep, I understand the reason why it's steep, and I don't think someone in HR department is actually keeping my money. Sometimes for us that actually understand how to calculate pay as you earn, you can also go as far as calculating to actually see if you are happy with how HR is calculating your pay as you earn. And lastly, I like to look at my leave days. Yes, we are entitled to leave days as per the Labor Act. Your employer can give you leave days, but they can't give you less than what you are entitled to in terms of the Labor Act, but they can obviously give you more. The reason why you need to look at your leave days is because most of the time, the system on which you apply for leave, if it's an online system, is independent from your payslip system. But sometimes you don't even do it online, you do it manually by by filling an application form, getting it signed by your supervisor, handing it in HR, and assuming that HR takes that leave, process it on the system, and makes the necessary adjustment on your payslips, so that your payslip at any point in time is actually reflecting the correct leave days. So you need to make sure that whatever leave that has been taken is actually processed on your system. You need to review your leave days so that other people's leave days aren't deducted against your leave days. Maybe you have similar surnames to someone and HR makes a mistake and deduct the leave taken by someone else on your payslip. And you also need to look at your leave closing balance, because a lot of companies have different leave policies to say that when you resign, we pay only X amount of leave days, or at the end of our financial days, you forfeit certain leave days, or you are actually accumulating all the leave days and you are entitled to a full payout of leave days when you eventually leave employment. So unless you are actually aware of what your closing balance is, you could be forfeiting leave days, your leave days could be used incorrectly, or you could also be getting too high of a leave balance when you actually aren't gonna get a payout at the end of the day. So these are various aspects of things that I look at my pay slips, because this is what matters to me. To you, maybe you have other things. For example, a lot of government employees have loans that deduct directly from their pay slips. You need to make sure that the deduction that is being taken off your pay slip is correct, and when you have fully paid off that loan, your employer actually ceases to collect that money when that loan is fully paid off. So up to you is to look at your pay slips. Are you familiar with the deductions? Like, for example, when I looked at my pay slips there, I didn't even realize that my HR has automatically added my husband as a spousal group cover as soon as I submitted a marriage certificate. But that is something that was already within my expectation, but it took me time to actually realize my pay slips has an additional deduction, which is a spousal cover. So it's things like that unless you review your pay slips, you won't be able to pick up. So this is really the reason why I'm bringing this pay slip review. This is hopefully the last video unless something critical comes up. So let's please engage in the comment section below. What aspect of your pay slip were you surprised at, or what aspect of your pay slip do you look at when you get your pay slip? Or are you that type of person that just gets a pay slips and chunk it in the drawer, and then you have a heap of pay slips that never really gets reviewed? So yeah, that's all I had from this week's video. Thank you so much for tuning by. Please don't forget to subscribe, like, and leave us a comment if this is the type of content that you'd like to hear. Until next time, it is goodbye, and let's continue engaging and learning together.